If you think you could outsmart the market, you won't.
I'll hire you. 7-figure salary. I'll hire you up.
Yeah,
front. Bring me your 4-sharp strategy, and I will deploy it.
Yeah, exactly. You won't, right? So it's like the beauty of CAD and automation is like let the math play out. Like you've done the homework, you've done the analysis, you understand the theory of edge, you understand why you should have this kind of expectancy. Let it play out.
Okay, welcome everyone to another episode of the 0 Day Podcast. Today we have Eugene.
What's up, guys?
Also known on Discord as well. So we just thought it would be cool as someone that trades full time and has kind of developed business to give a perspective of someone that's priorly ran businesses and small businesses and is more looking to replace their income through trading. So if you just kind of want to give a little bit of intro of where we are, how we met. How you got working with Trade Automation Toolbox and help people out in that group as well.
Right.
It's very active on those Discords. You just kind of intro yourself a little bit.
Yeah. So my name is Eugene. You'll probably see me in a bunch of sort of the 0DT groups. I go by Eugene. You'll see me post a lot about, perspective and, what the market's doing. And obviously some of the, the not fun parts of this business and sort of poking jokes at market makers and so on. But my background is running small business, essentially. Started a number of small to medium-sized e-commerce brands, retail stores, and sort of pivoted to trading, I'd say about 4 or 5 years ago, like in terms of like full-time and really digging into understanding.
And was that mostly all options, or?
It was for some reason, it was just, it was always all options. The leverage aspect of it, I think I gravitated to that. Like I didn't have a huge account at first, obviously. So, I'm like, okay, how can I leverage the heck out of this? Obviously options is that. And you go down your path of like the Furus, the endless YouTube videos. You're like, okay, logically can't be. I was always skeptical about it, but sort of went through the stepping stones of trying to find out what's what. And then, eventually stumbled upon, I think it was David's podcast, right? I'm like, okay, this makes a logical sense. Like, and this is when I started to be like, okay, does the edge make sense to me? Like, that was the first time I was like, okay, do I understand why there is potential for inefficiency or potential to make money in this trade, right? And I think that was like the theta engine that was first, got me into like, interesting. Okay, there could be something here.
And then when you started to get into this, were you like, this is immediately a better business than the stuff I've done in the past, or your experience has been what has that been?
That's a good question, actually. So obviously, I don't think you've ran business before, but people who have could relate to this. Like, running a business involves obviously like staff, insurances, like the overhead, the rents, the overhead, dealing with suppliers. Like, again, depends on what business you're in, but like that eventually took a toll on sort of what I saw myself doing, long term. I just wasn't in love with having variables that were somewhat out of my control, right? So, and this is, any sort of business has those variables, right? What drew me to markets and what drew me specifically to options is like, it's the purest form. I find it's the purest form of like clean business. And when I say that, it's like, it's a pure, essentially look at it as like a sport, right? Like if the market's not there one day, like you got bigger issues to worry about than like money, essentially, right? Like, I mean, obviously markets close, things happen, there's periods of time where there's no trading. I get that. But for the most part, it's something that's going to be there every single day. It's a skill that you could sort of develop and implement, well into your 90s. So I'm like, and it's infinitely scalable, right? So think about that, right? Like individually, as long as I was able to grow my account or take on money, if, that's an infinitely scalable business with a mouse click, right? You're not hiring, training, and, dealing with another 50 staff members, right? So
yeah, I'd say it's like for trading, if you want to run like a small business, like something to supplement your income that you can do as a sole proprietor, almost like a very high paid consultant or lawyer, it's the best thing to do. But at its core, trading is a very scale game. Like that's really where you get the economies of everything going, but that kind of gets into a different track. So how's that been thus far, and what's kind of sparked up some of your inspiration to work with other people or help other people out, or what do you see in the communities out there?
Yeah. So I recently decided to kind of jump on with the people at TAD and sort of.
And what kind of fueled that decision?
To be honest with you, it was a. I know the owner of the software quite well. I've been talking to them for years. Obviously, I use the tool myself, so I'm like, okay, this is a very powerful system that could essentially set people free. And when I say that, is like, and again, there's plenty of people with very high paying jobs in these groups that like love their job and want to trade part time and automate part time. But for a good portion of people, like they're looking for anything possible to escape that 9 to 5 sort of slave mentality, right? So it's like, if I could be a conduit or some sort of factor that could help people escape that 9 to 5 mindset, or help supplement that income, that has massive good karma for, like, I'm trying to collect those karma points, right? Like that's kind of how I look at it, right?
And then what do you think is kind of holding most people back, or where do you see the people that have the most success kind of come from with their mindset?
Right. And listen, I think background wise, it's a multitude of things, right? Like you could be like, there's very good, you see a ton of like engineers, right? You see, we're both in the same groups. Like you see a ton of people, lawyers, engineers, some like math background people, but I'm none of that. I'm none of those, right? Like I worked in a corporate environment for many years, sort of quickly realized that 9 to 5 wasn't for me. And, the minute the entrepreneurial bug bit me, like I was, venturing into anything I could find edge in, essentially, right?
Yeah.
I think it's, we'll talk about this like in detail, right? It's like really treating this like a business, right? Like, what are you doing day to day? Where are you spending your time to help develop trades, to help develop edge, understanding where edge is coming from, understanding how you're executing, understanding how to ensemble things, right? Like everything you normally talk about in sort of the content you put out, but really being cognizant of like, am I spending my time in the right places on a daily basis, right?
Yeah, and I think that something that I see that kind of a lot of people struggle with is like, since it's easy to try something new or get into a new trade, or it's infinitely scalable and people kind of get dollar signs in their eyes, that they often don't understand the process of it enough to go through it and do it. And then if they hit a roadblock, they just kind of stop, slow down, or give up, rather than like really pushing through it and getting through that next step of kind of how they progress with, whatever they're trying to do. And it never gets easier. You just get better at solving the problems.
Exactly.
That's kind of ultimately what it comes down to. And a big part of that is focus, where I see that, like we're talking about people's backgrounds, it's like, obviously an engineer or someone could probably do good, or a software engineer could do good in it, but it's generally just the people that commit the most time to it.
Absolutely.
That do the best. And like, I would say, like, in terms of scheme, it's like, there's definitely a level of like IQ. Like, smart people can come from all places. It's not defined by your career or your income, but like generally most people that are doing this are very intelligent. Even when I think of options, there's like, it was one of the first things where like physics and math kind of solved the true value of something, which I think is why it attracts a lot of people to it, when it's a little less like woo woo than what's the multiple of like Robinhood is, and why is it more than Charles Schwab? It's like, we just know that's not true. You know what I'm saying? So I always kind of find that interesting. But with your trading as a business, like, could you kind of go through how that process has been, and then maybe like the last roadblock that you solved that kind of like set a light bulb off, and then maybe one that you're kind of currently working through right now, and what do you think is kind of holding you back from that constraint that you're looking at?
So let's break it down as sort of the first part of that question was the last thing I solved, right? So I look at, and I think this came a lot from your content. Honestly, it's how do you ensemble well enough to be able to cover sort of the three things. And again, this is how I look at things. You may look at things differently, right? Throughout my journey, I stumbled upon like he wasn't a guru. Like I hate to call him a guru. He's just a guy who, he passed away actually. He had something called a strat. Have you heard of this thing?
No. A strat.
The strat. It was
Yeah.
just, he was selling obviously signals or whatever, like a course. I don't remember, but something resonated with me that like the market can do one of three things, right? Essentially on a daily basis. It can go up, it can go down, or it could just sort of oscillate throughout the day, right? It's like if you, and that's an obvious, right? Like that's an obvious fact. So it's like, how do you put together an ensemble of trades or scenarios that capture, one of those out, like any of those outcomes essentially throughout
And
the
what
day.
time frame was this? Was 0 day time frame?
Yeah, it was zero. He was obviously implementing. It could be implemented on any time frame, but
Yeah.
I've adapted that sort of train of thought of like, okay, am I covering a massive rip up? Am I covering a massive downfall? And if we're just oscillating throughout the day, like, am I covering that?
Yeah.
And understanding like what that looks like. Again, there's a ton of great tools now. Like we know like a ton of back testing tools. Obviously, you could script your own stuff through Pine Script and like zero coding experience. ChatGPT is your best friend. You could do a lot of really neat things without having like an engineering background, right? So it's like, can you put together your own versions or get inspired by other people in the communities, right? To see, okay, can I put something together that makes sense for me and for how I trade?
Yeah. And then how did you solve that ensemble and how the results was? There's like a bad thing that hit you where you're like, ooh, we went through a change in volatility and you took a bigger drawdown than any of your back tests could have expected. And then how has that been also this year, assuming you kind of figured out this year where it's like you've had all of that. And then some. And a lot of, especially zero DT strategies have like kind of dragged a little bit.
Yeah. So it was mostly like, am I adding, and I think you've covered this before, it's like, am I adding trades for the sake of adding trades or are they actually creating some sort of diversification, right? So it's like really trying to zero in on diversifying how I shoot my shots throughout the day, right? So it's like really look like, people look at like EMA cross and I see, okay, what am I doing additionally to that to like, add another layer of entry point that is not directly correlated to like sort of what 90% of people are doing. So.
Yeah. And then do you normally use like an objective number to look at that? Or do you kind of like philosophically think about that a little bit?
So everything stems philosophically first, right? Like it needs to make sense.
That's where I think a lot of people miss it. Like you have to understand.
You have to understand.
Why they work and
everything is sort of like sort of the premise of the edge is VRP, right? Like we know that, but like what additional edge or what additional layer can you implement to sort of better extract that VRP, right? So
and it's kind of like a balance between them. Like even you talked about EMA and it's like, it's not the greatest signal. And like you can get stopped out on like all one side on like a reversal or something. But the nice thing about EMA is like within the data set, there's no kind of like null hypothesis. Like you're either taking a put or you're taking a call. Some people will certain times a day not take a put, not take call. I don't think that's the right way to do it. But like the fact that there's no null signal means that like whatever we're gathering, I expect to be much more accurate over the future. No free lunch, obviously, that's why it works.
Yeah.
Also,
and again, like everything, again, to your point earlier, it's like you got your workhorse trades. Like you have like you're kind of breaking down your stable of horses in different categories, right? Like you got your workhorses, you got your like the stars have to align type stuff that like
it's hard to be Shohei Ohtani, so you should just try to do one thing really well first.
That's it. Do something ordinary, extraordinary well, and just like bang out your key stable of trades first, and then have your supplemental additions on top of that, right? So it's like I really try to fine tune and really zero in on my the main, like sort of the main stable of your daily workhorses, the trades that have at least a couple thousand occurrences in backtest that I know like the sort of the edge makes sense to me.
Yeah.
There's at least a couple thousand trades in the backtest. Okay, like why would this stop working? Like kind of that's sort of I start challenging myself on and then kind of working backwards from there.
Yeah, and like I kind of recently, I originally got the idea from Alex Hermosi, but I came up with this thing where it's like he uses the core 4 on basically like how do you get people in your business? There's like lead getters, there's like referral people, there's, people that close. And like kind of what I determined was with options is basically it's like there's our risk premium or edge. Then there's basically the frequency of occurrences. There's our ability to protect against risk and offset drawdowns. And then there's basically the accuracy of our price. And I think those kind of four things can really simplify down why what you're doing works and can be a nice objective backstop of, okay, like which one of these am I weak in? Or if I screwed up, like, can I go and look back at this template and be like, ooh, this is probably not, a good idea to run this trade because, we can talk about accuracy of price. Maybe you're not you're just diversifying for diversifying sake. So it's like you're taking the same price twice. Obviously, that's probably not going to work well. You didn't really increase your frequency of occurrences because you just did more of the same thing with a different flavor on it, basically.
Exactly.
So, I think that kind of stuff is a good way to look at it from two more levels down. But kind of on that, like now knowing that if you were going to start trading again with like $100,000 account and you're pretty sharp and you're like, I can dedicate 10 hours a week to this as a source to get income, like what would be like 3 things you would tell people to focus on to do to like get that rolling and time frame, if you could provide that, your thoughts on that also.
It's an interesting question. I think, listen, dedicate 9.5 out of those 10 hours into testing and understanding your edge. Like there's nothing more important than doing the homework up front. Like dedicate yourself to the process, right? Like, that's number one, probably. Yeah. Number two, I'd say like, once you've done the homework, the discipline part is, again, as like somebody who's, being an entrepreneur, previously running businesses, you always want to have like your hands in the pot, like wheeling and dealing, making deals, whatever it is, like directing people. This game is not about that. And learning that discipline comes with a price. Obviously, I've paid that price in terms of just like intervening or like, oh, I see the market's going to do this. It's like, I definitely should EC here. And like, you may win. It's a coin, like it's a coin toss, right? Like you may win a few times. The last thing is probably like be obsessed with the ability to match what you've set out to do. Like this is something I talk to you a lot about, and like I've built my own tools around. I obsess about matching my tests and like making sure that the way what I'm executing on a daily basis through TAT and how my templates are set up are matching my back tests like to it as close as I possibly can, right?
Yeah, and I think a lot of people don't even look at it. Like that is the cardinal sin of automated trading is people will run something and then they won't even compare it to the back test and realize where they are, or they'll wait a month to do it, when it's like if you're only weighing yourself once a month, like good luck losing weight. Exactly. You don't really have a data point of where you're going. So I see a lot of people struggle with that. And the other thing too is like when we talk about testing, I think that something a lot of people miss is we all talk about edge, and it's like I think edge is interchangeable with volatility risk premium or risk premium. And I think by understanding that those two are interchangeable, it lends better to people to not curve fit, because it's like people will try to put filters or like think just because they use a Pine script they end up like creating some edge because people can't back test it easily as like a MEIC or something. And like if you really look at the stuff where if you're trading MEIC 10 times a day and then you have another trade that's like using some custom script you vibe coded that takes 8 entries a day, like I can promise you like whatever that signal is, like 90% of it is random because you're just already generating so many occurrences. There's like not that much you can do with it. And
fair enough. Yeah, absolutely.
But understanding that, I think, prevents people from overcomplicating it. And then you don't think that your vibe coded thing is wrong and you try to over optimize it, but rather you try to get the basics first. It's like, let's get you going to the gym. Let's get you working out. Let's get in shape. And then you can worry about like upping to a level of where you're doing. And then also, like you said, with like obsessing, hitting it, is it's like, even now with where I'm at, a lot of the stuff I do is still very simple. I've started to spend a lot more time doing custom stuff, hiring people, getting way deeper in engineering. Right. But like the amount of time till I actually implement that, because it has to be so much better than the simple stuff.
Yeah, totally.
Like I'm taking time for it. And a lot of the stuff that I do, it's even just kind of a filter that's like, how do we get rid of half of our double stops? Like that's really the thing on something as simple as MEIC,
Right.
which is
Right.
a massive, massive alpha boost basically.
For sure.
And I think something that people don't even look at a lot in business is like, what's the constraint that's preventing you from basically going to the next level of where you are? Because it's like, if you have a 200 grand account and you're doing 4% a month, it's like, you kind of just need more money. You know what I'm saying?
Yeah.
So like now maybe you kind of view your entire financial perspective of it's like the business that I'm after is just making more money, not staring at screens for 10 hours a day. So like, how do we combine that together? And this is often where I see people get stuck because they pigeonhole themselves into a goal of where they want to be or like who they want to be like. And then they end up just being on Discord all the time, like, scheming about weird sources of alpha with other people through DMs, which is like obviously not getting you
Right.
to be a better trader. So I would really lend that like when people start out like that, they start to view like where are the constraints and what are they can do. And where I would say, so like Tammy literally posts her strategy out there. I think Tammy's a great example because she does really well. She's a little bit discretionary, but not really on just like the most basic strategy. And it's
Right.
like,
Right. Vanilla MAC.
yeah, and it's like run MEIC for like a quarter and don't touch it and spend like less than 5 hours a week doing it and then like move on to your next step. And it's like simple stuff like that I find would lend a lot better to people progressing logically. And then also knowing on Discord and other trading sources like what's good, because people seem like they're always in search of that next new thing, but it's like your P&L wants boring, same simple execution. You as like
Your
trader
workhorses.
entrepreneur,
Yeah, your workhorses,
wants the
right?
girl in the red dress. So
Yeah.
kind of being on that community, it's like, where would you say are some good places to look to understand how to start running stuff, simplifying stuff? Like one thing I actually really like is, before Option Omega became so big and
Right.
Option Omega posts a lot of content,
Right.
is we just use BYOB, which
Right.
is from TAT. And it's
Right.
like so simplified.
Yeah.
You can only run 2 strategies and like you just
Limited stops.
You
Yeah.
mess with the premium. And it's like, I really think a lot of people should just sit there and like just only test on that till you're like illogically bored
Yeah.
of what you're doing. Because like I can promise you it matches. I can promise you there's nothing super special in there, but I can almost promise you like you can get market-esque returns, like
Yeah.
past market-esque returns.
Yeah,
Like
yeah.
let's talk about 20% returns with like
Yeah.
7-8% drawdowns and basically like no worries for what you're doing, which I think a lot of people miss out at. But kind of where would you look to start finding good resources to focus on and get from that step from 0 to 1 of being profitable?
Yeah. So before we jump into that, like you actually brought up something that like, obsessing about like that matching. So like, I think anybody running a business or who previously ran a business, like KPIs, right? Like,
Yeah.
what are you really measuring, right? Like, what are you trying to measure?
Why are you measuring?
Yeah.
Yeah.
Like, it's like, so something that I look at like really closely is like, you look at like, again, I'm not as, you're running a fund, so it's a different story, but like anybody who's, running this to supplement income, right? Like I'm looking at like how much am I able mentally to lose per day? Like I think
Always less than you think.
it always.
Yeah.
And it's like, and how much am I sort of mentally prepared to lose per week, right? And I'm seeing like, where do I land every single day on that like standard deviation curve, right? Like if I'm landing in between those 2 standard deviations, weekly and daily, I've shown you these charts,
Yeah.
I think, right? It's like, I know everything is working. Like, don't touch anything, let everything run. It's like, everything is being executed as designed, right? So it's like, that is one, so that sort of daily and weekly P&L and how that relates to like years of backtest P&L is one thing that I watch closely KPI wise.
Yeah.
And I think a lot of traders that are looking to, transition from like a job to full-time trading is like, understand your numbers first, like understand the kind of cash flow that you're about to embark in. There are weeks, months, you will make no money, right? Like this is something mentally you need to overcome, because then the tendencies of, deviating from the plan, right? Like coming in or like, revenge trading or whatever it is, they become more prominent in your mindset, right? Because if you're not making money for months and they're like, oh, I see this opportunity, like this is the time to triple down on something, right? Like it could burn you even harder, right?
Yeah, and I think where a lot of people miss out too is like if you're trying to supplement your income, cash flow is by far the most important thing. And I think we've just been brainwashed by society and being like, oh, the AI arms race, like people in Silicon Valley are making millions. It's like they got like $2.5 million of illiquid stock that's on a 4-year vest. It's like, do we really think they're actually well compensated? You know what I'm saying? Where I think people don't get that of how valuable the cash flow is. And then another thing that people don't get too is like, they assume that when they use discretion or revenge trade, they're like, they have talent and they're like outperforming people. But it's like, I can promise you options have risk premium. So like, if you're going to gamble, you're on the right side of the table. Correct. So like, there's a reason why all the people that run funds and all the people in the discords with big accounts and whatever, like there's a reason those people all trade the same way. And I can promise you with your 300 grand account, like the little bit of your experience, you're not this early close guru or whatever it is, or it's eventually going to come back to bite you. Where it's like, you just can't continue to run that. It's like, sure, you may get in for a little bit and get out, but if that's your form of income, it's like options is not the way you should play that. Because like they call it like power laws. It's a thing in VC where it's like 1 pays 1,000x. So it's like picking stocks is a power law thing. Like you can buy a long option on Robinhood and then just like print money or buy Bitcoin or whatever, where it's like selling risk premium is not a power laws thing. Like sometimes it can be for nickel wings going money. Like that doesn't happen very often. It's
happens
so unlikely.
though. It has.
That's
it
so
happens.
unlikely.
Yeah,
but I think people really need to understand that prospect. It's like when you use discretion, you're on the right side of the table with risk premium to gamble. And then like, it's not a thing where you're going to get 100 to 1 payoff because you're probably going to get bit selling risk premium and doing that. So like just from that frame, I think people really need to understand like how to go slower. And like, also I think a huge part of the risk premium is like, it's just boring and slow, but it works.
Yeah. And the mental, you're like, you don't, we talked about this earlier. It's like, where are you spending it, return on time, right? Like where are you spending your time to obviously to early close or to do like, are you doing a ton of like technical analysis to try to understand when, what, like you see a lot of people use GEX and I've explored all of these things. It's like, okay, yeah, you may get it right once in a while, right? But like, is that time, analyzing GEX charts or like looking at TA, is that time better spent on like developing the next automated strategy, right? That could be added to your stable of horses that could print, X amount of dollars throughout X amount of time, right? It's like where you spend your time, I think, as an entrepreneur too, like it relates well to like anybody running a business, right? Are you trying to fix one keyword in SEO or an email that you think is going to convert better? It's likely not going to do shit. Like, excuse my language, like, spend your time on what really drives, revenue, right?
Yeah. Or even like a thing, it's like, if you discount your commissions down, it's like, that's actually real edge that pays off today. Like you improving your back test by 2 Sortina points, it's like, good luck matching that in the future. Yeah. Where I think a lot of people get misguided for that, or a lot of people come to me and they're like, oh, my dream's trading full time. And it's like, dude, my dream is to be like underemployed in a job that pays me like 120 that I can work remote and just completely trade with like no friction to what I'm doing. It's like, that is a great setup. And you need to realize that, where it's like, once you get into the larger space, it's like the stock market is attainable to everyone. It's very competitive. So if you're really trying to push high levels of income and are actually all in with your income and your family's livelihood and stuff on trading, it's like being a pro athlete. It's like you have to do the
reps.
And you have to do like, you have to sleep well, you have to do your stuff on a Sunday, like you have to check everything, like you have the duty to yourself and your family to do it. And it's like, a lot of people aren't made out for that when it's like starting a business too, but like 100%. As a hobbyist, it's like, this is quite nice. And I think when people set the right goalpost of their expectations, or if they're trying to do something kind of extreme, they set the right expectations in the rest of their life of how to do it. Where again, with the Silicon Valley entrepreneur thing, it's like, there's so much bad information and like gurus and stuff out there. And it's like, just think about the business perspective of those people. It's like, I can close 200 grand from a client and that only pays me 4%, like 4% or $4,000 over the course of the year. And then I have a bunch of business and operation costs. Whereas like if someone sells a $5,000 course that they can sell to anyone, even people without 200 grand, they have a 99% margin. It's like, who do you think has more money to get your attention?
100%.
And who do you think is going to try to get your attention around that? And it's like, it's not going to be me. Like I do like post stuff on YouTube. It does help me with my business, but it's like those people that have 99% margins on courses that everyone's their ideal client and they run ads, like that's who's going to get your attention. And that's just not really how it works. And almost the example I give is like, if you wanted to learn something in depth, it's like, would you read a book or would you watch 30-second TikToks? Because like, that's literally how you're kind of choosing to learn when you go through a lot of those things. And it's like, I've taken so many courses and did all this stuff. I wouldn't call them a waste of money, but it's like, I've taken all the spot gamma courses. I've subscribed to all the things. And it's like, I do think in some extreme case scenarios, there's good information, but in terms of being like a systemic daily trader, like no way that's a good use of your time.
Right. Listen, I think a lot of, I'm a bit older, like a lot of what you're seeing now is like people want like the Ozempic fix for like, they want to like, nobody wants to like, anybody could lose weight, eat less calories, output more, like and like you'll lose weight. It's like pretty, listen, people have disorders, like let's not go into anomalies, but like people don't want to put in the work. And again, this is an entrepreneurial business. You have to love the game. It's a game, it's a sport. Like if you look at it that way and you fall in love with the process, because the outcome is financial freedom, the outcome is geographical freedom, this skill can be taught to your kids, or like you could take this, like it's not like as an athlete at 40 you're pretty much cooked, right? Like you could trade to your 90 and still like bang out, like if you stay sharp mentally, still bang out edge, right? Like, so that you have to fall in love with that idea. I think if you fall in love with that idea, I think that's going to keep you motivated to stay on top of all the groups, right? There is good ideas being shared in a lot of these discords. A lot of smart people are throwing out ideas, or like
I'd argue to say better IP than like, I'd argue to say
I agree with you. Me and you talk about that all the time.
A lot of large scale institutions and people,
there's a lot, because hobbyists have a true passion of like, I need to beat this game, right? Like it's a game, right? It's a casino game, whatever you want to look at it, right? Like, so there's a lot of like-minded people are like, okay, what can we do to beat this game, right? And it's like, you look at the software that's being developed like by just like hobbyists, right? Like it's pretty gnarly, like in terms of the what's come out of, right? So, it's like you have to fall in love with the process of doing this, and it's not for everybody, right? I think the majority of the listeners that listen to this podcast, they understand that Furus are just, it's like those, like they're trying to sell you the Ozempic shot of trading, right? Like it's not gonna,
or the lifestyle. And it's like, I can tell you as someone that runs a decently large fund and does pretty well, like my lifestyle is nowhere near what people post.
But again, it's like, what society thinks the outcome is, right? Like it's telling you it's cars, it's women, whatever it is, right? Like it's free, like it's nonsense, guys. Like this, I'm sure any intelligent person understands, like if they're selling you a course, the business is the course. Like it's like, if anybody has really found some insane alpha that is generating 200-300% per year, are they really out there on the internet selling it? Like, let's logically put, I mean, it's nonsense.
And I mean, some things like we talked about, I mean, if you're just trying to gamble, like there is great massive risk premium. Like if people are willing to lose all their money,
but that's gambling.
There's a lot of strategy. Like,
dude, that's gambling.
If you're willing to take a 50% drawdown, like these strategies that are out online that can return 100% return, more than reasonable to have a 2-mar. Like I completely believe that. Like 100%, no problem. So like, not saying they don't work, but it's like you need to understand what you're going for, and it's like when they advertise that, they're like looking for people that want to roll the dice on something like that. Where when we talk about it, it's like geographical freedom, cash flow. It's like, this is counter-cyclical. Like there's no multiples and options. It's just money in your bank account. And like, it actually gets better when times get worse. And like, I think that's a real opportunity where it's like, you are hitting a new all-time account high when the S&P is down 30%.
That's powerful stuff.
You want to see what the easiest passive income is? It's buying, the S&P at a VIX of 60 with 400 grand of cash flow you've generated, and then you sit on it, and you have all the benefits of the tax and everything. And it's like, that is the real opportunity for the options, and when that really comes up. And I think, again, a lot of people miss the goalpost of what that is. And then also, like, a lot of people, and I think you can talk to this too, but it's like, when we're in Discord groups, people are like, not asking dumb questions, but it's like, you're looking for the wrong thing. And kind of like a Napoleon Hill thing, it's like, if you want to get helped by someone that's really good at what they do, like they do want to help you because everyone's been there, but like it has to be something that's mutually beneficial. So it's like, you need to think about your talking. And it's like, just for information, like I met David in like 2021, and you know, David went to Princeton, like graduate degree in mathematics and
Right.
electrical engineering,
Right.
like was on a second hedge fund, had like,
Right.
you know, tens of millions of dollars. And I was literally like a 26-year-old in a construction site. And I like talked to him a little bit. I listened to all his podcasts several times. I
Right.
read the books. I built out spreadsheets based on his spreadsheets. And he just started talking to me and teaching me stuff based on that, because it's like I was able to actually present value to him on like, hey, I took your 7DT strategy or theta engine strategy and I applied it to TLT, XLE,
Right.
all of this.
Right.
It's on the TradeBusters spreadsheet if you guys want to check it out. And like he was like, oh yeah, I'd never ran tests on this, and I ran all the tests
Right.
and like double checked it. And it's like that's really what's gonna get you going to the next level, because people have already basically solved these things on how to do stuff, and then people are always in different parts of their life of like you can learn from them in certain spots. It's even like Kyle, the guy that runs TAT, it's like he's obviously busy running TAT and running a business, but he's been trading for a while, but like he just sticks to a lot of the simple strategies, experimented with some stuff on SPY, and just sticks to it and has a great PCR.
Absolutely.
And like that's not his main focus, but like you could learn a lot just from someone that's siloed his obligations to different aspects and has a lot of success with it, where it's like that's obviously he did a lot of work in the forefront to get there, but it's like that's got to be motivating of a goalpost to see how little maintenance he potentially puts in to do it, and also how valuable it is that he's connected to the ecosystem and can learn all this stuff very quickly for a great return on his time.
Absolutely.
Yeah.
Yeah. No, nothing further there, really. I mean, it's, you know, it's self-explanatory. I think there's, like, to our earlier point, ton of people sharing great ideas. It's like picking up what people are putting down and really like running with it on your own, right? Like, you know, it's inspiration, essentially. That's how I look at it, right? Like I never copy anything directly and be like, okay, this guy put out a back test, like this is an instant copy. Like I'll always, you know, Option Omega has a lot of that, right? Like there's channels where people are sharing like continuous back tests, right? It's like, well, there's inspiration of why this is a good idea, why I think there's edge there, and then how would this fit into, you know, the other 20 things that I run, right? So it's how does that all, you know, ensemble together, and then kind of take it from there. But yeah, I definitely use all of these sort of the main discourse that I know about, like Option Omega, obviously TAT, TradeBusters, and the other one, the
PMT.
PMT, yeah. PMT is a good one too. A lot of good traders out there on that group, right? So, and then just, you know, finding a personality. Like I think one thing we didn't talk about is like personality fit to like for what sort of trading style that you are okay with, right? Like what we do obviously is a grind. Like it's a grind type of it. There's no like, yes, there is wings that pay once in a while, but most of it it's a grind. It's a grind business. You're banging out hundreds of trades a day, right? Like whatever, dozens, however you want to look at it, right? It's like you're not just, you know, throwing out some long calls or long puts and praying that this thing just goes parabolic in one direction and pays you out huge, right?
Yeah, and I also think it's a grind until like you really believe it and go through the process. So it's like after you've been through enough drawdowns, after you've kind of like sized too large and found your size, it becomes like a lot more relaxed. And also like when you can put some capital away to be comfortable, and or you just kind of see the potential of that. Whereas like, yeah, if you go full into trading and it's 100% your income, it's not going to be the most pleasant thing learning, and probably have you learn pretty quickly, but that can be kind of rough. So back to on our earlier thing here. So like what constraint you think is currently holding you back in trading your portfolio, and you're working through it, and do you think we could solve it right here, right now?
I don't think I think I'm in a, like personally, I'm in a perfect, like it's taken me years sort of to get there. Like I'm in a good spot of like, I work backwards. Like I look at everything cash flow wise, right? So it's like, I need to cash flow X amount of dollars per month, like assuming, you know, there's drawdown periods, like looking at what those look like and sort of model my returns that way, right? I don't necessarily sell a high percentage amount of my NLV. Like I don't need to, right? So I just,
what do you think is a good starting point of percent of an account to sell on a daily basis?
If you're completely new to this,
I mean, like
it depends on your account size, right? Like it depends on
you're doing it.
Yeah, it depends on your account size. It depends on your goals, right? Like I think everything works backwards, right? Like what are you trying to achieve, right? Like
you don't have anything prescriptive, you would think, for that.
I think, listen, you know what like the golden, like what we all talk about, like 1.5%, 2% tops. Like
Yeah.
is kind of what people try to shoot for. But again, if you have a humongous account size and you're just trying to get some, you're already a VP at some tech company and you just want another like 10K a month, like you don't need to stretch your, you don't need to go ham on your account. You really don't.
Yeah. Like what I like to tell people is, I believe, don't quote me exactly, but this daily standard deviation of the S&P is roughly about 1.3% since 2020. So I think looking at, how much premium can you sell that for, let's say 20% or 25% of your buying power is around that like 1.3% daily move. Because it's like, I think that's a good benchmark for risk premium, because people will freak out when they lose. It's like, we're tranching trades like dozens of times a day. That lose 65% of the time. Like you're going to lose a lot.
Yeah.
But like a lot of people get stressed out when they were up 0.5%, they lose 0.5%. And it's like, that's like less than the S&P daily move. And I think that just brings a lot of stress to people, where it's like, put that in perspective. And on top of that, like you're earning the treasury yield at like 4.5% in your account.
Right.
So like you really don't have as much volatility as you think. And people would grab NVIDIA and just it goes up 4% in a day and no one cares.
Right. I'm not, and listen, I hold up, like, there's income trading. That's what we do here, like on a daily basis. But there's also obviously like your long-term holdings, right? The difference here is once you take that stop, right? That's gone. Like that money you'll never have back again, right? Like if you understand that, like if you look at a 50-year chart of SPY, like it's going one direction. Yeah, you could have minus 2-3% days. Like if you hold on, wait 10 years, it's one directional, right?
Yeah.
So like I think when it comes to income trading, I think it's more important to look at like what we talked about earlier, like what's your daily mental threshold? Like I think people look at percent, I can handle a 10% drawdown.
No.
I'm like, no, you probably can't. Like, it's like, what can you mentally handle losing on let's say a daily is not great, on a weekly basis. If you lost 20, 30K next week out of your total account, right? That money is not like, it's not you're holding a stock that's going to go back up. You lost it, like it's gone. Can you handle that mentally, right? And if people say, yeah, I can, then that's sort of work backwards on like,
yeah, do it.
Yeah, like,
yeah, we'll see it.
And look at, like, obviously look at the tests. Like when I pull my portfolio for any period of time, I break everything down. Like and ChatGPT is your best friend with this. Like you can go nuts talking to data, right? Like show me every week P&L for the last 5 years. Like what's every week P&L look like? What's the average week look like, right? What's the worst week look like?
Yeah, I think people get in a little bit of a rabbit hole when they just analyze past data a little too much when they do that.
Fair enough.
But again,
you need some sort of you need some sort of mental anchor or some sort of conviction to continue doing this, right? Like,
and I think that's where it is. It's like, what is your conviction? I know we talked about with it's like daily standard deviation. So like, are you looking at that weekly ChatGPT thing? So it's like, what's that's a good question. The benchmark that's objective.
Yeah. So the first thing,
my emotions change. Like I get in an argument or a sleep bad,
and
like my drawdown tolerance is much less than it normally is. That's why we need something objective.
No, that's a good question actually. I think, like I told you, firstly, I look at daily match rate. I look at match rate per strategy per day, and I track this pretty closely, like through my own sort of Excel building.
So what percent do you want?
95 plus, 90 to 95 plus.
Two standard deviations, that's what I want. At least 95%.
Yeah, ideally 95. And if I beat the back test like crazy one day, I will go and analyze why the heck did I beat it. So I'm not looking to outperform or underperform. I just want to match, because matching gives me the conviction to scale up, number one, and number two, to continue doing this, right? If I can't match, well, then we're just playing a game here. Like I'm not playing games. This is a business I'm trying to run to try to understand my KPIs. And one of the key KPIs that I watch is my match rate.
And what are the other KPIs?
And then again, it's like, is cash flow, right? Like I look at cash flow. Like, am I cash flowing weekly, daily, monthly, what I expect to cash flow from doing this, right?
And what is that like on a weekly basis? You have a cash flow. What's your monthly win percentage on cash flow? Like, what does that look like? Return on capital, let's say.
What do I target personally? Yeah. So I target about 3.5 to 4% a month.
Okay. Yeah. And then in terms of like percent of weekly wins and percent of weekly months, what are you normally looking at for your KPI?
Percent of weekly wins,
like how many percent of weeks are profitable, how many months are profitable?
To be honest, I don't look at like win rate percentages as it comes to months or weeks in
Yeah.
specific. I've never really dove deep on that, to be honest. I look at, like I said, like I just look at this standard deviation curve of my P&L.
And when you say standard deviation curve, can you break that down a little more? Like, what are you looking at?
Yeah. So what's the average? So let's say daily, right? So
Yeah.
so on average, I expect to make X a day. On average, over the last 5 years, running these 20 strategies has produced X amount per day, right? Then one standard deviation out, right or left, it should fall into this sort of, let's say you're targeting $1,000 a day, right? One standard deviation is like -2 on the -2,000 or like +2,000, right?
Yeah.
That's like within one.
Your standard deviation would be 2,000. Your expected return would be 1,000.
Yeah. And then, 2, 3, and so on, right? Like the key is that I stay within 2 standard deviations on a daily basis, right?
Yep.
Let's say I will track the worst days or the worst weeks and say, okay, like what is the worst possible outcome here? Again, past returns are not indicative of future returns. I understand that, but mental conviction is kind of key for me, right?
Yeah.
So this is,
Here, I got you. You
yeah.
get some water. And also, like, statistically, you get a little ice too. And also,
What?
you get a little ice too.
Oh.
And then statistically, also, like, your standard deviation is always going to basically deviate significantly higher than what is implied in the past on a daily basis, on a weekly basis. And then I find it starts to average out on a monthly and quarterly basis, basically. And the reason this kind of occurs, and I had a lot of trouble with this, so I think it's important for people to understand, is it's like when something is uncorrelated, 0.2 correlated, 20% of the moves can be described by the movement of the other. The other 80% is what's known as uncorrelated, or basically the real world for that is random.
Mm-hmm.
So like in the short term, that randomness is going to like deviate a lot. If your correlation goes from 0.2 to 0.3, that's 50% more clustering. So like my monthly and weekly standard deviation is almost exacting the back test, but my daily standard deviation is almost 2 times higher than what the back test is expected. And the other thing I want to highlight with this is like a lot of people will also screw up is like you're optimizing your individual back test, where it's like you're only taking your EMAs at some time during the day and you have an up gap filter, and it's like now you're just introducing way more variables to where all of your vibe coding on optimizing, it's like you're optimizing random stuff. I don't care how good AGI gets or whatever that is, like you're optimizing something that's impossible to predict. And by definition, uncorrelated actually means random. And when we have a deeper understanding of that, I also find that it prevents a lot of people from going down the rabbit hole. Because when we talk about what makes it so accurate, it's like go on BYOB, run MEIC every single 15 minutes. And it's like, that's your expected return. Whereas like the second you start using between 1 and 3 p.m., and it's twice as good as all 15 minutes, like, that's going to deviate in the future. And anyone who's been trading long enough is like, we all used to trade at 3 p.m. and 3:15. It was the 5 sharp strategy in 2022.
The holy grail.
It printed money. Like,
and look at it now.
Everyone's making 150%. It's like, that thing hasn't made money in years.
Yeah, I know.
And that's just a prime example of, I also think we can bring this back to the risk premium. It's like the risk premium of that more conservative return, and like knowing you're going to get stopped out a lot, but you have a higher accuracy, is like, that's the base that everything's built on. And a lot of people build on a base of sand for what they're doing with their back test. And that's where it all starts. And then all of your vibe coding and stuff on top of that, like you're just making noise and movement, and you might as well be looking at technical charts, because it's by random by definition. No software or anything can help you, but philosophically you can kind of understand that. So another trade that's gone really bad is a lot of people ran kind of like this calendarized structure where we use 7-day longs and 1-day shorts to offset it. And
double calendars? Are you talking about
like
earned,
earned basically. So like you're buying 7-day longs,
I remember that.
a day or two, and then you're selling 1-day shorts for the close. And the thing about this is like nothing was inherently broken about it, but since you're only trading once a day, it's going to take a while when you get in a drawdown to pull out of it. Like I think it's won 49 of the last 50 times. So it's had like one loser in 2 months. And then since it's based on delta volatility at 50, you could be collecting 3 weeks worth of premium at another one. So it's like that base of that, it's like philosophically, no matter how good the numbers are, that is just never a foundation you can have be like more than 1x notional of your portfolio, even if it has a 5 sharp, because there's so much of this sequence risk and problems with it. And I think a lot of people, even in your jobs and careers, really don't realize this is like you don't experience the average return of the stock market. You experience your continuous life of the stock market through time. So it's like,
Right.
if we get in a war, like your 10% average return shakes out over 200 years, or it's like the 60-40 portfolio,
Right.
when interest rates went down and to the right, is a new construct that didn't occur till basically the 1980s, and it worked for 40 years until it doesn't now. But like the historic return of that is basically no better than just holding a bond basically
Right.
in like a cash secured account. So like when we think about time frame, I think it's really important to do it. It's part of what attracted me to zero DT. And even like the other edge of the sword, it's like what I'm doing has a 3 sharp, but I only use about 40% of my account because like we're exposed to so much risk, because we're exposed to it every single day and we have a lot of leverage that
Right.
if it ever breaks, even if it's over a 10-year perspective, it's like that's gonna be pretty catastrophic. So it's like you have to reel back in what you're doing. Whereas being 100% invested in SPY is obviously not as scary, but you know, another crazy stat, it's like 25% of decade periods since like 1920 have actually had negative returns, negative real returns after inflation. And it's like, you know, we need to understand all this stuff. And I think that's just a good proxy of like, that's a real opportunity of options for like what is countercyclical and how to make money. And you're really getting, and my other pitch here for zero DT is like, it's truly uncorrelated. And I think this is a good example of like when we think about philosophical reasons, because it's like the market, like oil and S&P are both exposed to risk. You hold the position 24/7, 365. Whereas with zero DT trading, 80% of all the hours in the week are outside the market hours. So it's like, even if you can look at the correlation of a zero DT strategy that says 0.5 to the S&P, and then you look at oil that says 0.2, it's like zero DT is less correlated because 80% of the hours it's in cash, and we know what
And
cash
I
will
love
move.
I love that. I love that aspect, because a portion, and again, a portion should be in long-term investments like SPY, like whatever you're into, right?
Yeah.
Bonds, gold, Bitcoin, whatever you're into. This is a business. This is an income generating business. Like the fact that you have all of your, you know, cash, which is essentially like your operational staff, whatever you want to look at it, back at home base waiting for deployment again, that's phenomenal. I think that mentally, the mental clarity that creates of like, and I've done like the overnight, the earn stuff, like it wasn't a fit for me, right? Like, and I spoke to you about this, like the fact that I have to think about, and again, if it's properly ensembled, everything balances, blah, blah, blah. I get that. It just, and there's nothing wrong with that. I'm not, you know, bashing the trade. I think if you ensemble it properly, it is a great trade or a great ensemble of trades. It just wasn't a fit for me. I have a family. After I finish my trading hours, I want to mentally check out. And, you know, I'll put in my development, my edge development throughout the weekends or evenings when everybody's kind of sleeping and, you know, doing their thing. I like that sort of absoluteness about it.
Yeah, and I kind of want to see the pattern. It's like it's knowing yourself and also knowing like the philosophy behind the strategy that really plugs in. Like the back testing is actually the easy part. Like that skill's easy. There's plenty of videos.
Totally.
It's like, you know, I've taught my buddy Connor who comes with nothing but options. It's like that is not a hard thing to master. It's you that's going to get in the way with that. And it's like coming down to knowing yourself, and then it's also coming down to philosophically understanding behind. And this is also why I think that, you know, older people who may be past their prime as society views them, they actually have a large amount of crystalline knowledge, which is their ability to make relations through everything that they've lived over the course of their life. And they also know themselves very well to understand like how to basically trade all this stuff. I will say women are actually very good at that because they don't have to deal with testosterone and like this feedback loop of wanting to win and like measure themselves in some type of hierarchy. So that's another thing that I think a lot of people miss when you do it. And it's like, there's all these talks about the mental game and whatever. And it's like, frankly, like if you're doing the right thing, you need no mental game. You know what I'm saying?
But I think any
like,
novice trader, dude, like losing money on a screen, unless like you were an addicted like gambler before, like where you're comfortable with that. That's a new feeling for most people.
Yeah,
like
you do have to get used to it.
You could see thousands, tens of thousands of dollars disappear on a screen in minutes. That will mess you up. Like that will put some, you know, some pretty wild thoughts in your head, because you're like, well, I could get this back. Like it can't possibly go any lower, right?
No, it always can. Yeah.
And listen, I've been through it. Maybe you have as well. Like I know a lot of traders that you have to like understanding that you have to let the math, like the beauty of TAD and automation is like let the math play out. Like, you've done the homework, you've done the analysis, you understand the theory of edge, you understand why you should have this kind of expectancy. Let it play out. That's your biggest, like, sitting on your hands, or like another reason why I got involved with the tech community is like educating people on that. Like, if you think you could outsmart the market, you won't. Like,
I'll hire you. 7-figure salary. I'll hire you up.
Yeah,
Bring me your 4-sharp strategy, and I will deploy it.
Yeah, exactly.
Yeah.
You won't, right? So it's like understanding that mentality and sort of like sitting on your hands, letting your, the work you put in prior to market open is kind of your biggest edges. Like, just like sit on your hands.
Yeah. It was a pleasure. I know everyone can find you on TAT, but is there anywhere else where people can contact you, or best way to chat with you, or
just Discord? I think Discord is a great, like, I'm usually pretty active in a bunch of communities, so just EUGNIS is where you find me.
Yeah, and then if there's anything else or questions, or if you guys want to come on again and we can chat if you guys enjoyed this, or there's more things you want to ask him specifically. We're pretty close to each other for the next couple months, so we can do more of these if you guys like, or maybe, we bring someone on the show and fix their problems live if someone's open to that. So we're open to recommendations.
Trading therapy. That could be.
We'll fix you in a half hour.
That's pretty good, actually. Yeah. Call in with your with your problems.